Good morning. This is E for eminywizard.com and marketwizards.com. And it is just before the open on Thursday, the 10th of January. A reminder, please use risk capital that you can afford to lose if you're playing this game. And a reminder, we do have disclosures on our website to remind you of that. And we're a educational organization trying to help people learn how to play this game and become a professional. If you already are a professional, we want to take your skills to the next level. Okay, I was up early this morning and not typically get up at 6 o'clock, but I had a smoke alarm that went off this morning, and actually it wasn't going off. It started beeping, so I got up and changed the battery and said, I'm up, so let me get going. We had held the 60 where we had expected it would probably hold first time back. So the next thought is, can you get back to the middle or not, that 71, 72 area? And my thinking at the time was, yeah, it probably could, based on a number of things. So this is our look at the overnight range. And note how that 68 area, that is a magnet. And some of you have the system, can easily see where I calculate that balance of power. So 68 magnet, I said, is going to give us a little bias up or down. I like the rotation from that 72 idea, but I felt that if you're a little patient, you might get a better entry in that 74 to 75 zone, and that would be the top of the pipe. So anytime we get ourselves a whack-a-mole formation where we're making higher highs and higher lows, want to be a little bit conservative coming back in. So sometimes you'll miss a great trade and you'll think it's going to abort and it'll keep going. But pre-market, I think that's the right call to make sure you paid, because that really reflects yesterday's low. So once we get above it and to the next, we could still play this game whack-a-mole, but my bias really is much more neutral than just going to crash down today. And there are a number of reasons for that. So anybody that has played early for 68s, you already have something in your pocket going with yesterday's trend and obviously the overnight range. So I'm going to think cautiously about the short side and figure that, yeah, we may be able to hit a few bounces today, but it's going to be neutral in my mind. So
I hear it. Just came on. I'm going to talk to you later.
Okay, here's our 5-minute RTH chart. And this chart gave me pause to think that we talked yesterday that if we could get below that 68 area, and the next potential support would be this 65 right here, this bar. And then we said, and then perhaps coming down into that 60, which would be the next bar. So step by step, we're looking at these turning points. And this lined up with the weekly middle. So for me, that just made perfect sense that we would be looking to use the resistance back here at 78 and perhaps the 60 to 58 as a support zone for now. And then obviously this 68, 69 area right here in the middle of that will be an important marker. So right now we're trying to resolve these two boxes. That's the way I look at this based on this framework. And if we pop up and take a look at the predictive model, you'll see that also supports that same thesis, where 58.5 is going to be a support zone. And this is realistically the bottom of the range and in the extreme range. Yesterday we said we're starting to get out of the extreme range. 78's the top, and then the extensions are the next two levels. So this 97.5, this was really a very disciplined place where the market respected that and has come back down. So in this format, we know that this 58 and 78 is really the rotation area for the next big move. Whether it comes back down into this box, which would, test last week's high area, or back here testing this week's high. So I think the jury is still out, and I think we want to play conservatively today and not think just plunge because we had that overnight sinker. So I think it's two-way day right now. And as the market gives us new information, then we'll be able to adjust accordingly. Here's our angels and demons setup. Yesterday, at the end of the day, we had a tumble from that 88 resistance zone, the scene of the crime. Right, at the end of the day, it was chop, 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 and then it took the drop, bang, and overnight, and second thrust down, and now here we are going sideways, basically. So first things first, we've got to bust the range of the day before we think about anything else. And for now, obviously, this 82 area is going to be resistance. And above that, then obviously you've got to use that 88 again, 88.75, 85 actually, the 88.75. So I'm thinking for now, don't have enough new information to substantiate a breakdown or a breakout. And so we should be looking at range type trades. And this again will be this idea of yesterday's low that we want to keep an eye on today. So I'm not super bullish. I'm not super bearish. I like the idea we've come back, but realistically, if you put it into perspective with where we are, this is the current year's range. And so really this is insignificant compared to the push that we've had long side. And I think it takes time to form another top. And I don't want to rush the gun saying we're going to get a mirror day to that day that we had 100 points straight up recently. So for now, all we know is that we've stalled in an area that a lot of people expected it to, near 2,600. And the farther that we go long side, the harder it is to make the case for the shorts to get a really big move. So for now, I'm going to look at this platform right here as our next big support till that till that breaks. That support, obviously, that's in that 47 area. So that's why I keep saying that's a big support for now. That's got to be undone. And if it does, then that opens the door to come back in 37s and so on. So we've come a long way. And right now, I think we need a breather. And I'm not expecting it to happen all in one day. So that's my case for, let's think somewhat neutrally. And this is last year's range. You can see the range that we're in, 2632, the big resistance for now. On this chart, we can see how we're approaching this breakdown. This is the true breakdown basis, the values on this chart. And you can see how this not quite got up to test that. Usually we'll get above that, but not yet. And the bottom end of this, 2553. So we want to keep a look on that value, this box right here for now, based on the yearly. And we've had a pretty good push long side, and we can certainly get some backing and filling. But it doesn't mean that the drive long side is done, in my opinion. And last look at a chart. We talked yesterday about this 2591 being an important area. It's the actual middle of a 2-year range. Got all the way up. We've come all the way back to the bottom box, and that is held, and now we have bounced. So we're in this frame generally of 2502 to 2591. And that's being resolved as we speak. All right, today, play well. Don't overdo it. Take a couple of trades. If you don't like the open, don't trade it. Just sit and relax. and then look to make our 4 or 5 points. If you've already done that, you don't even have to play today. Try to be consistent, and if you want to be a pro, then forget making these big grandiose calls for that everybody loves to do, the next big targets. Just grind it out, as I said, and try to make your 4 or 5 points per contract every day. And that's easier to do than it is to say, hey, I think we're going back to 23.50 or whatever. Anybody can make those type predictions. We like to trade the rotations within the rotations. And that's the key to the success of our business, is understanding these significant squeeze pivots and where they're trying to go as long as they hold. And where they're trying to go is as long as they hold on this side. So for now, this 78 right back here is going to be the key, in my opinion, as the controlling resistance high. And obviously the low, until that gets broken, that's support. So anybody that is playing for the gap alongside today, think of it as perhaps a hit and run type trade, as opposed to just thinking about this an all day hold, because I think we'll do some range trading. And first things first, let's keep an eye out on the 5-minute RTH, because we are going to be opening near the rain line, and that was part of my thinking today, was this 66 to 65 area should be somewhat important. And we've got all this room to negotiate and work with. So my suggestion is, we've got some trap longs. We don't want to become a trap short. And that's possible today in a little bit of a slingshot. Don't be afraid of missing trades today. If we're opening at 70 and we've got an 82, we already know that's a 12-point range. So 6 points above that gives us 76 as our half gap. You should be able to do this in your head, guys. All right. Range type trade, and if you want to give it a couple of minutes, that's up to you. Neutral bias. And if I'm wrong and it just plunges, then so be it. And I'm wrong. You can always jump in and catch a piece of the move no matter what. But don't go crazy there. I said, I think we need to be a little bit more respectful of the market. Probably catch a few shorts before we're done, and definitely already got long strapped.